Hello, traders. Nick Shaheen looking at Lululemon. Um, Arabic word, by the way. Lulu means pearl. Let's see here. Active stock has done well recently. Disclosure is I traded it long. I exited yesterday, and I traded it based on an actual breakout, which I shared in the chat room. So the chat room link is down below if you ever want to join. You get 10 days free to check it out. The transaction takes you to PayPal, but there's zero cost. I just want to make sure that we don't get trolls in here. All right, so what now? Is the rally over or not? First of all, it will need the whole market. Second of all, it's at the upper ends of the range. But most importantly is that we charted it like perfectly. I couldn't have done this any more perfectly. So here are the lines that I drew for it before the breakout. So I said resistance zone, chase the breakout, and it happened, and I chased it. Arguably, the breakout really started at 352. 353.4 was a confirmation, and the other confirmation would be 360 plus, 359 plus. So I said buy the dip or chase the rip, and the rip happened. And this was the arrow I drew ahead of time. I didn't just draw it there by chance, and this was the high today. So I'd say that was pretty darn good, right? So from here, is that over? No, the easy work is over. This burst was easy to predict. Now it's a matter of retesting the neckline from which they broke out. They don't have to come all the way down, but if they do, it's still okay. I mean, look at it. The red-blue is just a regression line. So reverting to the mean is coming down a little bit, even down to 360. That wouldn't change anything. In fact, 358 would not scare me out. If it gets down to 358, I'm going to buy it again. Well, get long it again. I don't buy it, but I will get long it somehow by selling put spreads or something. So, in fact, I would probably start looking at it up here. Question mark. They don't make perfect entry points. And this guy, before I say this caveat, I may not do it because I hated how I needed, what I needed to do to book my profit. The quotes are so weird. Usually I deal with very liquid stocks. So when I see a bid and ask, I don't really care. Everything that I trade fills at the mark, the middle between bid and ask, even in spreads. But with this guy, I had an easy spread, a $10 wide spread. I just couldn't close it anywhere near the mark. It was just very frustrating. It was a winning trade. I couldn't believe. I think I tweeted something about it. Like, dang, I haven't had this much trouble booking a profit in a long time. And then I remembered why I haven't traded Lulu in a long time. Ulta is the same way, and a few other stocks. Priceline used to be like that, so I didn't even venture to try to trade the new ticker for Priceline booking. There are a couple of them, like TQQQ, for example, don't ever do spreads in that, especially not credit ones. So they're difficult. So I won't commit to doing the credit put spread on Lulu just because I would rather sell a put naked. And because of the history, it's just not easy to get a good clean quote, and then not easy to get a good clean fill, even when I'm booking a profit. But technically, the breakout is still ongoing. The easy work is done. Now it's a matter of testing. And okay, so what's exciting about doing that? Let me show you. This was Boeing, which was a nice breakout today, also intraday in the chat room. Let's say they do this, all right? Or this, whatever. And then they come back to here. And if they break out above that, how far up do you think they'll go? Technically speaking, they could have another $70 from there. $50 to $80. It's a big range, but do you really care? This looks like whenever, it's not a perfect cup and handle, but whenever they take this long to recover from a dip, and they fail, and they don't take nearly as long to get back to the same neckline, what does that look like? A giant cup and handle. And usually the cup and handle technically would be as deep as the cup, and that would be the upside potential, something as big as this. So estimate how, for me, COVID was an strange year, so I don't know if I want to give it full credit. So let's say just from here to here. That's $40 or so. I'm eyeballing things. It's a lot. So all you have to do is just either buy the dip here for the swing, and the way I buy the dip is sell put spreads or puts, and chase the rip. So the perfect situation would be wait for a dip, sell a put spread, wait for it to recover, and then buy the call spread or calls out of here. This would be probably the best way of doing this. Again, I haven't traded Lulu in a long time, and now I remember why. Nothing here is a recommendation. This would be my plan to trade it based on my personal preference. Arguably, the breakout was here, and the upside potential is a lot higher than here still. But the easy work is done, and these are my thoughts.